The government shutdown has officially become the longest in U.S. history, surpassing 35 days, coincidentally, under the previous Trump administration. So now the question becomes, what is the economic damage? What is the financial damage? And can you expect direct fallout from this, even if you're not a government employee? Well, that's what we're going to talk about here today. As always, my name is Derek. I got my degree in finance, so you don't have to. Let's dive right in. And let's start with the stock market, because the stock market is the one area that doesn't really seem to give a shit. Yeah, the stock market had a little blip earlier this week, but since then it's pretty much kept on going. And before that, it kept on trucking like nothing had happened. And that primarily has to do with the mechanism of a government shutdown. While a government shutdown does pause some major contracts for the government, and it pretty much furloughs or doesn't pay a huge swath of government employees, and it forces essential employees to work without pay, the saving grace is that those employees are paid. They're back paid once the government reopens. Now, Donald Trump had said something along the lines of not paying some of these employees. With that said, I think the stock market wrote that off because there are laws in place that require payment. So the stock market didn't really care. Another reason why is because private companies, unless they are directly tied into the government or they receive some sort of government subsidy or they have contracts with the government, the economy keeps on trucking along. A government shutdown doesn't affect your local grocer. Well, we'll get back to that. It doesn't affect, your local small business or your major businesses like Amazon, Google, etc. So stock market continued moving forward. Now, what does matter, in my opinion, are two main things. One is much grander than the other, and it's much slower moving. So you might not see the effects immediately. So we'll talk about that after. First, let's talk about the actual direct economic impact. So most studies say that this could reduce fourth quarter GDP by anywhere from 1 to 2 percentage points for that quarter. That is pretty significant. And the total losses could eclipse $14 billion. Now, with that said, that is assuming a 2-month or 8-week government shutdown. We are not there. But even at a 1-month government shutdown, $7 billion. So $7 billion of permanent losses with total losses being greater than that. That is, it sounds on paper like it's significant. It's actually not really that much when you take into totality the government, or the GDP of the United States is like $25+ trillion. So the actual direct economic impact, I don't think is really the thing that we need to be talking about. That's the second one is the more important one. But before I do that, I did mention grocers, and the reason why I kind of paused is because SNAP benefits were affected by this. And SNAP benefits were at risk of being completely canceled for the month of November. Now, at the time of the recording of this video, I am unsure if SNAP recipients got paid out or not, and that is because there was a ruling last week that basically said that the Trump administration must pay SNAP benefits with emergency appropriated contingency funds because these funds were appropriated by Congress. Now, of course, Congress controls the purse, so that was the most recent update when it comes to that, and we're unsure if this ruling will be implemented quick enough to save SNAP benefits for November. So I don't have an update on that. But obviously your local grocer might actually be affected if they see a reduction in demand. Okay, now let's talk about the thing that I think actually matters. Okay, and that is the United States perceived trustworthiness and stability on the global scale. Because the U.S. economy, and I don't want to drag this video out for too long. I've made videos on this before. The U.S. economy relies on, and it requires foreign investment. You must have foreign investment for the government to be able to debt fund GDP growth. Because when you actually look into the studies and how the U.S. economy functions, because we have a we have a trade deficit primarily to allow for the inflow of foreign capital into the United States so the government can continue to deficit spend. The government must deficit spend. We all know this. There's a massive budget deficit. The thing is that deficit spending also directly contributes to GDP growth, right? We are funding growth through debt. So because of all this, we require, as a nation, foreign capital investment. When you have a government that is already dealing with treasury bonds not being looked at too attractively, right? Government treasury bonds, people are leaving, investors are fleeing government treasury bonds in exchange for gold. That's why you're seeing gold for the first time above $4,000. You're seeing Bitcoin steadily above $100,000. And you see other investments. You see other currencies gaining against the US dollar because people don't trust the US right now. I shouldn't say they don't trust, but they don't trust it as high as they usually do. So when you have a government shutdown that is this long, it just shows instability. It shows a nation which can't figure its shit out. Excuse my French. It shows a nation that is extremely polarized politically, and both sides can't find common ground. And for foreign investors, do you want to invest in that? If you're not in the United States, do you want to invest in that? If you are in the United States and you look outward, if you found a country that used to be the gold standard and now is bickering and fighting amongst each other, that doesn't scream stability and that doesn't scream safety, and that causes a loss of trust. And that, to me, that is the big problem here. Because while the government shutdown itself is just a government shutdown, we've had them in the past before, when you add it, it's like the drop in the bucket that overflowed everything. When you add it on top of the fact that this is already an unstable viewed, the US dollar is viewed as unstable, the US ability to repay its debt is viewed as unstable, and that is why you have treasury rates which are increasing to try to compensate, to try to bring in foreign capital. It's just another point against the United States. And that doesn't take place tomorrow. That collapse, per se, doesn't take place tomorrow or next month. That is something that slowly happens over many years because the trust is slowly eroded, just like the side of a coastline, right? This coastline cliff. That took decades, thousands of years to erode to that point. Same with the Grand Canyon, right? Those canyons aren't carved overnight. They're carved over eons. And when it comes to the U.S. trust, it's not going to take eons. It's going to take decades. But it's already been happening probably since the turn of the century, probably since 2008, probably since the U.S. had to print insurmountable amount of money to save the economy from 2008. And we've been reeling with the effects since then. So that is my main concern. So this government shutdown, while it is tremendously unprecedented, it is, a very long shutdown. The average government shutdown is less than 10 days. That in and of itself, as you can see in the stock market, doesn't really matter. What actually matters is the perceived trust in the U.S. And if you own assets here, if you're invested in the stock market here, if you are a U.S. citizen, that is what should be concerning to you. Because that is the slow thing that kills the economy, right? It's like the virus that remains hidden until it's too late. That is what the U.S. is going through. It's not some, it's not some car crash, crazy, violent wreck. It is the virus that is slowly eating away at the foundation, and eventually the entire house of cards falls. That's what's more concerning. But I won't drag this video out longer than it needs to be. This government shutdown was unprecedented. And the economic damage will be real, especially if you're a government employee, and you had to basically survive for a month plus without pay. That is very real economic damage. But the real problem is the lack or the continual eroding of trust in the U.S. and the economy, which, remember, the U.S. dollar is not backed by gold anymore. It is backed by the U.S. economy. So when you have problems with stability and the economy in general, you end up with what we're experiencing right now. And our politicians continue to kick the can down the road. So, okay, I won't drag this out. If you like personal finance, world economics, and investing, you're in the right place. If this video was informative, please consider subscribing. Helps the channel out tremendously. It's difficult to grow here on YouTube, so every subscription means the world to me. I hope to see you in the next video. Usually they're weekly, but because the economy is insane right now, I've been doing videos a lot more frequently. So with that said, see you in the next video. Until then, take care.